Welcome into a very special daily editorial here on the Coil and Economics Report. Al and myself are very happy to be joined by a new guest on the show. We have posted many of his articles and received many comments requesting for us to bring him on. He has appeared on pretty much every mainstream media outlet to give his opinion on the U.S. markets and economy, as well as weigh in on precious metals. He is also the president of Fleckenstein Capital, and his daily market commentaries can be found at fleckensteincapital.com. We will also be posting a link underneath this interview to go check out his website. I, of course, am talking about Mr. Bill Fleckenstein. Bill, thank you very much for joining us today.
Well, thanks for having me. I hope I can live up to your billing.
Now, Bill, I'd like to start this off by addressing the government shutdown and how this has impacted markets. Yesterday, the first day of the shutdown, and today have been very, very different for the markets. The conventional markets were up yesterday, down today, while gold and silver down over $40 yesterday, and have almost climbed the whole way back today. What are your comments on some of these moves here, Bill?
Well, I think that unfortunately, the quote-unquote noise factor is far higher in the last couple of years than it ever was before. And a lot of that has to do with not just the high-frequency trading, but the algorithmic trading whereby computers try to read press releases and listen to conference calls and make decisions based on, decision trees and things that programmers program into the process. So I think that many, many days there are wild gyrations that don't really have much to do with anything of any consequence. I don't think the shutdown of the government per se is necessarily a big deal. Obviously, it's happened, 17 times in the past. I think that this will probably go on for a while, and, depending on how long it goes on and how acrimonious it gets, it may have some ramifications, most of which would be to slow down the economy to some degree, depending on what all gets impacted. But when push comes to shove, they'll just pass a continuing resolution or jack the debt ceiling, kick the can down the road for another year or something like that, because none of the problems that we face as a country are going to be addressed absent a crisis. So most of this is about nothing, although the fact that it's so acrimonious may get a few people to step back and examine some of their theses. The thesis all year long has been that the economy was going to be strong, and therefore the dollar would be strong, and then the Fed would taper. And, that has been wrong all year. People still continue to believe it. The dollar index is about to go negative on the year. Obviously, the Fed's not going to taper. And the economy's been crummy. So perhaps this will cause people to reassess those arguments, and maybe that will have a consequence. But in and of itself, I don't think shutting the government means a whole heck of a lot.
Bill, you and I were talking off mic about how long we've been involved in this industry and et cetera, and we both came to the conclusion you wrote a book, which I will pick up this afternoon, and I changed the focus on our radio show back in the very, very, very early part of this century to asset-based investing, and then we kind of evolved from that into asset-based investing to conventional investing to politics, etc. But, I find it very, very interesting that apparently the majority of our country right now, and I'd have to say that probably consists of the Great Unwashed, are people who actually believe that things are going okay financially in the United States. And I got to tell you, I've been in this game a long time, as you have, and I don't see how anybody can believe that to be a reality. Any comments on that?
Well, I share your sentiments. I mean, obviously there's a chunk of the people that are in the middle class or plus or minus that are getting squeezed pretty dramatically, and I don't see how they can feel good. I don't know about the fact that, the government now touches 40-some% of households with one form of a payment or another, and perhaps those people don't feel so bad about things. I don't know. Obviously, the Federal Reserve's policies of trying to drive asset prices higher to make the economy better has disproportionately impacted the quote-unquote 1% or the top few percent. And, any group of them can be delusional because if you have enough money, I guess you can be myopic enough to even vote in politicians that are going to try to gore your own ox. But I'm sort of shocked at the fact there isn't more outrage, A, at the Fed, or B, at the government in general. And I'm most surprised about the fact that more people aren't complaining about the fact that cost of living keeps ratcheting up at the same time people are talking about deflation. The present game is for manufacturers to shrink the size of something and keep the price the same. So I don't understand where all of this goodwill and Goldilocks mentality comes from, but it does seem to be prevalent.
Bill, I have to agree with you 100% on that. And as all of our listeners know, I'm based up here in Vancouver, and looking down into the U.S., even traveling down there, I've noticed a huge shift over the past few years. And you mentioned an issue that we covered extensively, that being tapering, which clearly they did not do, and you had predicted in prior articles and interviews that you gave. I wanted to touch on maybe this QE to infinity, and as I think we all agree that tapering will not happen and probably will not even be an issue here in the next couple months until Yellen comes in, or if she is taking over Bernanke's position as the Fed chairman. What do you see happening down the road as Bernanke steps away and the potential of Yellen stepping in?
Well, I think she's going to be the Fed chairman. I think she's more proactive, perhaps, than Bernanke, and more dovish. And by that I mean, when I say proactive, I mean I think she actually is one of these types of people that would say, look, we should have a 2% target inflation rate or some number, and if we're below it, we got to catch up. Do you know what I mean? And so, I think she might be more proactive on the printing money front than Bernanke has been. But what really matters is when the psychology of the financial markets changes, the Fed has done basically nothing but print money, create bubbles, and then blow up new bubbles to solve the problems of the prior bubbles for 15 years now, and they were reckless before that. And yet people seem to think that they know what they're doing and they're the answer, even after what's happened. So the psychology regarding the Fed, I think, needs to change. The psychology regarding printing money needs to change. I don't know what's going to change these things, but until something changes, i.e. until the bond market starts to take the printing press away from the Fed, they'll continue these exact same policies. They will continue to be ineffective, because you can't print your way to prosperity, and the economic machine has been broken both by government and the Fed. And so we're going to keep doing this until the bond market says you can't do this anymore. That's been my view for a long time. That might be starting. Interest rates backed up. The 10-year bond is backed up from yield of 160 to 3% about 3 weeks ago, and now it's rallied to 260-ish. Somewhere the bond market rally will fail, and at some point then, the bond market will, I think, take out 3%. And when that happens and the Fed hasn't tapered, then maybe we can start a discussion about why has that happened and what does that mean. Because obviously if you could just print money to prosperity, it would have been done for thousands of years. Instead, every time countries have tried it, it's ended in quite a big disaster.
Bill, we've got about 2 minutes left here. I'd just like to wrap this up by you saying, are you telling us exactly, what are you telling your clients, subscribers, etc.? What are you telling them they should do right now?
Well, I don't tell anybody what to do. I describe what I do. I try to enunciate what I see and how I would respond and all that, because everybody has to make the decisions themselves. Everyone's, risk profile is different and all that. I think that you have to protect yourself against printing money. I closed my short fund in 2008 because I knew they would print money, and I'm maybe about to restart a short fund. But I think for the most part, I've told people don't try to short stocks. It's dangerous to own plain vanilla stocks because it's all driven by hot money printed by the Fed and momentum players and things like that. So I've said to people, you need to examine the environment and own precious metals to protect yourself, and various ideas like that. That's what I think people need to do. Having said that, all the decisions that made me want to do that have sort of come true, but the idea hasn't worked in the last couple of years. And sometimes that's the way it goes. But I think there's money to be made in the precious metals prospectively at some point.
There you have it, ladies and gentlemen, from Bill Fleckenstein. I can guarantee you this man will be back on our show.